Good afternoon, traders. Chris Buss here with Traders Profit Compass with your Market on Close report for Wednesday, November 11th. Okay, let's get started. Really choppy out there today. Basically, today could be summed up as the reversal of the reversal. We had the big move on Monday where they dumped tech and rushed into value on that vaccine news and had a little bit of follow through yesterday, but now today they reversed that and went back to growth and tech and dumped a lot of the cyclicals as the reality of COVID, hitting new highs every day, and the reality that the vaccine, while good news, obviously, won't be available for months and months and months. And what happens in the meantime with no stimulus and, that kind of thing. So I don't want to get all wrapped up in the macro weeds because that's really not what I do. But the result of all that has been very choppy action. And, I'm a pattern trader. I look for patterns that I can, that are going to resolve up or down with a line to shoot against. And there hasn't been a lot of that the last several sessions, maybe going back even, a couple weeks. We got whipsawed on some of our stuff that we got. And, anybody that bought value over the last couple of days got run over. And so it's really back and forth. I think now's a time to be, you got to know who you are. There were some opportunities today, intraday, but as far as swing trading, holding, multi-day week trying to catch a trend, very tough to decipher at this point. So let's go through the short-term charts and see what we can try and figure out. SPY 2-hour had the gap up, then the pullback, and now we've got a 50% fib bounce where that stopped it right in its tracks midday today after the initial surge. If we go down to the 30-minute chart on SPY, you can see where, we opened. We had an initial little push up here towards 357, and that was rejected and brought back down, and had a relatively strong closing candle, but that was tough to get anything going, intraday on that type of narrow range. And narrow compared to, this kind of action where you're talking, 364, coming down here $14 in the matter of a day or two. That's, you can make some hay on a move like that. This is a lot tougher. Not saying it can't be done, because if you break it down on a 5-minute chart, if you're a sharpshooter, you can make a little bit here and there, but certainly not like these moves. So it was, this has been a consolidation bounce, a fib bounce up to the 50% level. Now tomorrow we'll see, if it can power above or if it drops back down below this 354. I think that's the pivot on this short time frame. It's 354. As long as it can stay above, then there's an opportunity to come up here to 359 and possibly, 364 in the days ahead if SPY can regain its footing. What gives me pause is this momentum profile, and you can see how weak it is. Normally, if you see a down move cycle reset at the 0 line, what you want to see is a reacceleration back up, after the reset. And what we got is just this little wimpy baby bounce here. I thought it was going to actually break down at the end of the day. It held it together right here at the end, but that does not inspire a lot of confidence in, okay, we reset and now we go. This is very weak, and any kind of move down below 354 will roll this over back below the 0 line, and then we'd be resuming the down cycle and looking for a move back down towards 350. So I think tomorrow may be telling. Let's move on to the Qs. They had a good day, up 2%. Bottomed out here at actually had a touch of 280 and held this 282 line. Jumped up today. You had an opportunity to buy this 287, and then you can see it got stopped right here at 290 at the 50% fib level. So for both the Qs and SPY, the bounces have been stopped at the 50% fib level, and you can see right here, here was our gap open. You had a chance to buy here, make a few bucks, come up to 290. But you can see a lot of the day it wrestled with 290 and could not power through. And again, here on the momentum profile, you got the bull cross, but now the flattening at the 0 line. And remember what we always say, bulls do not want to see a PPO rollover at the 0 line going the other way, because that will signal a resumption of the downtrend. And same thing here, if you draw a trend line up off the lows, if you were to get a breakdown tomorrow below the 50 level, and have that roll over, then the downtrend will resume. So tomorrow it's pretty easy, depending on if we have a gap opening. But north of 290, you can be long and look for 293 and possibly higher. But as long as 290 holds, then the odds are of a rollover and a roll back down towards 285 and possibly 282. IWM, this is your value cyclical index, just chopping. And what we've got here, if you think about it, I don't have it drawn this way, but we've got a bracket trade between 173 and 170 is the consolidation area. You can be long anything above 173 and look for a move back to 177. But if it loses 170, be short and look for a gap fill back down towards 164. And if you want to trade inside the range, that's fine. You can be short against 173 and then you can buy 170. So this is going to resolve. Obviously, it's going to resolve one way or the other. Just be ready. If you don't want to mess with this $3 consolidation area, that's fine. I think the bigger move, the bigger money, if you will be on either a breakout or a breakdown from this range, where you see here you've got a potential $6 gap fill here, and you've got a potential $4 move back up towards the highs. So Those might be easier trades. Keeping in mind nothing's easy, but this is chop. I mean, you've got to be active in here if you're going to trade this range. Here, I think if you get a breakout, you just set your stop right below 173 and you wait. Same thing here. If you get a breakdown, set your stop just above 170 and then just let it find its own level down here, because there's no technical support in this area. Here's the 30-minute, basically the same thing. Real strong closing candle. I don't know what that was all about, but the same discussion applies. You can see the range here, 173 to 170. Not going to spend a ton of time on that. Facebook, after that initial surge this morning, got stopped at the 38% fib and this uptrend line, and then just oscillated the rest of the day within a narrow range. I think tomorrow your pivot is going to be 275. I think you can be long against 275 and look for a potential push up here towards 280. But if it loses that, if it loses 275, I think you got to lean bearish on that and look for a move back down towards 265 to back test this low. And that's what I would favor. Not favor enough to front run it, but given you've got these overhead resistance levels that seem pretty, firmly entrenched, I favor it not being able to power through and then rolling back over. And you can see here on the momentum profile, yes, you did get a cross here, but it's pretty weak and there was no follow through. So, and RSI has yet to cross 50. So if it's going to fail, I think it's going to fail relatively soon. What would change my mind is a breakout above 280. Then I would have more confidence to go long and try and capture a move to 285. And then above 285, it's gone. It's going to go back up to the prior highs if everybody piles back into technology. Apple had a really nice day. Opened here around 117, and we've had all these levels identified. So if you're motivated to trade Apple, your first objective buy was at 118, and we had talked about that in the morning video, and that was good for nearly $2. So that was a nice little trade, showing some nice relative strength here. And notice on the PPO, we got the rollover, but then we got the turn at the zero line. And just like we talked about on the previous example of rollovers below the zero line, rolling up at the zero line is bullish. And you can see here that RSI took a dip below 50, but then is now above. So this looks strong. Tomorrow, it's all about this, 120 level. If it can pop that, then it's off to the races. And if it stalls, there may be a rollover here. But I mean, that's a nice bounce. I'm actually a little bit surprised in that. All things being equal. Nice move off of the 115. And remember, we said anything above 115, it's on the right side of the chart, and below 115 is on the bottom side of the chart. So if you were, on top of your game and involved in Apple, this recapture of 115 gave you a nice swing entry that you could have, if you wanted to, if you're, a multi-day swing trader, gave you a nice entry point, and now you're up nicely on that position. And if you did that, well done. That was a nice play. Tesla, not much happening today, really. Um, no objective entries or trades to speak of. You've got to get up here to 420 to either get a breakout or a breakdown. And same thing with 410. If it comes back here in the morning to 410, you've got an objective long as it holds. If it breaks, you've got your short. And same thing up here at 420. On the breakout, you can be long looking for 430, or if it gets rejected, move back down to 410. There really wasn't anything here today to do at all. Microsoft had a nice day. Opened here. You got the recapture of 213, which was a well-defined level. That was your buy point. And then you got a nice $4 move. That was a nice trade if you took that. Now it's come up here to this 38% level at 217. Notice it reached up here on this candle to close the gap. So that technical move to close the gap has now been completed with that reach up candle that got up to this 218 level, and then it dropped back below. So tomorrow, 217 is your pivot. If it can break back above, you can be long and look for a move back up to 218, where there's some resistance here at these lows. But then above that, you've got 221.50 to shoot for. And of course, if it gets rejected, then back here to 213. So that was a nice opportunity for an intraday trade on that. Amazon also had a nice day. It was up 3%, $100. Here, gap open, held this 30.50 level, which we had identified in the morning. And if you got long there against that level, then you had an easy day. No shakeout candles, no worries really. You didn't have any reason to exit your position. Here at 3,100, anybody that missed that initial move could have either you could have either gotten long there, and that was good for $40, or added to your position if you were motivated to do that. If you got in the morning, that was a nice day with a more or less unidirectional move. Google didn't do anything today. It gapped higher and then just stayed. Did nothing the rest of the day. Just toggled within a very narrow range. Nothing really to do there, unless you had bought yesterday at the box low. Then you're fine. Here in the middle of no man's land, it's probably going to be hard to take a trade tomorrow. I would say, I was going to say you've got a line here at the midpoint between 1780 and 1720 right here at what is that, $60. So right here at 1750, if you use the midpoint as your toggle point, your pivot point, you can be long above and then lean short below. But you're just playing for the box boundaries at that point, and probably a little bit harder trade to take than having something really objective at the outside of the trading range. Netflix, nice day today. It opened just above 480. What was that open? The open was 483, but then came back below 480, and then once it held that level, anybody that was motivated to take long had a nice opportunity there, and you got $10 or $12 out of that. And now you've got this gap level right here at 487.50 that can be your, you know, if you held, I don't know why that thing keeps popping up, but you could set your stop just below if you carried your position overnight, and then look for a move to pop this 494, and then you've got a run for a big gap fill up to 515. So tomorrow the key levels are 494 and this 487.50, the bottom of the gap. If that fails, then you're probably going to roll back over here to 480. But if this 484 pops in the morning, if you're not involved, that would be a place to get long and shoot for a big gap fill back up here. That would be a nice objective entry, and the perfect setup would be, of course, you know, open below and then take out that level during the regular session so you can grab it on the breakout. Set your alarm right there at 484 if you're interested in that trade. Now, you know, like I said at the top of the video, some real choppy trading out there, but there are some trades that are setting up. Here's financials. What you've got is a bracket trade. You've got 27.50 and 26.75 here. Set your alarms. If interest rates continue to rise and this breaks out, take it long. You've got a perfect level to shoot against. If this whole thing was a fake out, a head fake, and price breaks below the bottom of the box, you got a big old gap to fill down here all the way down to 25. So that would be, you know, $1.75 on that trade. You would have support here at this level, but that would be the trade to make if this breakout does not hold the gap, and then you've got to move down. And there's lots of examples of that. Here on energy, you've got a swing low over here at 33.50, and now you've got a breakout and a back test to that level. I like energy long here. We'll see if this thing is durable, but you've certainly got an objective level there to shoot against at 33.50. The next level will be 35, where there's more overhead resistance, and then you've got the 200 at 37. But given where this thing has come from, if oil does anything, I think price can drive higher, and I don't think, you know, getting back to 40 is beyond belief. I think you know, it's got to churn through these levels, of course, but I think 33.50 is a good line to shoot against. Certainly very objective and low risk. I mean, if you lose 33.50, you're out. Just, you know, close it. But I think there's some strong momentum building in the energy trade. Delta. A lot of gap trades, a lot of bracket trades for the airlines. Here, you know, we had the big move on Monday. Now it's consolidating. If it loses the bottom of the box and the 200, it's going to come back here down into the lower 30s, you know, 31, 32, right in that area. That's a trade worth taking, because if it fails, you know, there's a good chance it's not just going to stop right here. It's a good chance there may be an overshoot to the downside. I'm showing this one not because I think it's some massive trade you need to take, but just pointing out something to watch. This is Patterson Dental. And, you know, we had the high here, came down, came up to tag that high and is now pulled away. That's a nice double top setup. And what makes it nice for me is you've got the bearish divergence going along with it. You know, a lot of energy was spent coming back up to the high, and you can tell that now momentum and RSI are at much lower levels than this previous top, and that's usually a good sign, a good higher probability trade of a double top, and then this pulling away, possibly filling this gap and then moving lower. It's the same thing in reverse that I look for on a double bottom, where you've got two equal lows, but you've got the momentum on the second low at a much higher level. That makes it a nice higher probability trade that you've got a double bottom, and so this is the exact thing in reverse. BABA, I wanted to show this, some real interesting action in the Chinese tech names, as I guess China is coming out with stricter internet rules. I don't know all the details about it, but it's certainly whacked BABA and JD and KWeb, the ETF. A lot of those names have just been, you know, I mean, really whacked. I mean, this thing was, you know, trading north of 300, and, you know, 2 days later it's 265. But notice there was this trading range before from 265 to 245, and then we had the breakout here. This 265 is a real important line. If price can reclaim it, I think you've got a good buy the dip objective long. If price can, you know, get up above 285 and hold it, you've got an objective long above this trading range and recapturing this level where it broke out from. But if it can't, if tech becomes weak again, or still in the case of these Chinese names, you're looking at 245. So whether you're a bull or a bear, this is an absolute pivot point right here. So I would, if you're interested in this name or trading it, zero in on 285, or excuse me, 265, and watch it like a hawk, because if this was an overreaction and they can reclaim it, you've got a big gap to fill all the way up to 290. That would be, you know, obviously a nice trade to capture from 265. But if it can't, if it rolls over, then you're looking at 245 at the bottom of the box. And you can tell we've already broken below the uptrend line. So just from a technical standpoint, it favors lower, but you don't know where the buyers are going to step in. So you just can't blindly say, oh, you know, just, you know, lay on a short. I think you got to watch this here, and I think you're going to have time to either buy it or sell it after this move. But definitely a really important spot. Zoom got killed, you know, on this rollover. Found support here at this larger volume over price bar here at 360 and got a good bounce today. I think it's in no man's land here. I don't think you can take a trade. I think you got to look for a move back up to the declining 50 here at 440. And if dreams are going to die, they're going to die right here at 440 at the declining 50. Lateral resistance, declining 8-day, declining 20-day. If this is going to have a problem, it's going to have a problem right here at 440. And if you didn't catch this move, there may be a bounce to short on Zoom right here at 440. And of course, if it reclaims that, then you've got a gap fill up to 500. You've got that trade if it were able to gather itself and recapture 440. What you may see is come up to that level and hesitate and maybe gather a little bit of energy before it were to break out. But I'm thinking that the gig might be up for a while on Zoom. It'll all be decided, I think, right here at 440 on the bounce. See, I'm getting better at pausing the video. Sorry about that. Had a phone call. Okay, moving on to QSR. Big trading range here between 53 and 59. Top of the range has not been able to break out, since June. And now we're at the top of the range. Is it going to break out now? I doubt it. If it wasn't able to break out on, Monday's massive move, I don't see it, all of a sudden accelerating. Now, I don't know when earnings are, but sell resistance and buy support. I mean, it's been working for, 5 months. I don't see any reason why it won't work now. You've got about $1.50's worth of risk. If you were to get a green candle that came right up to, 59, that's your ticket. Then you can set a stop just above and wait for a gap fill and move lower back down to 53. And that's, it doesn't look like a lot on the chart, but 58 to 53 isn't chump change. So that might be a nice little trade to try. Like I said, real choppy action out there. I think the jury's still out on this value trade. I'm glad we didn't pile into, all that stuff on Monday and Tuesday. We'd have looked like idiots today. I want to see that stuff consolidate and find a line to shoot against. I think that's the key. Finding objective trade locations. And I think really the best bet is looking for some of these bracket trades. If the thing's for real, those bracket trades will hold and they'll break out to the upside, and then we can grab them. If the whole thing on Monday was a massive head fake, those brackets will not hold, and we'll have good downside gap fills to take advantage of in the days ahead. So I hope you found the information useful. If you're new to the channel, please subscribe and hit the alarm, and then you'll get notified of all the new content. Also look over in the show notes for links to the blog site and to register for my content, where you'll get an email and an invite to the trading room. We've had a lot of nice interaction in the trading room, and I think you'd really enjoy it, and I think your trading will benefit from it. So have a good rest of your evening. We'll pick it up in the morning like we always do. This has been Chris Buss with Traders Profit Compass. Talk to you next time.